Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management. Today is Wednesday, July 10th, 5:30 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Roundup Daily Market Insight video. Market state, we're in an uptrend since May 6th. Check the trend gauge over here. An uptrend that's getting a little bit too strong from an index perspective. I'll talk about that in a second. We do have the four green arrows. Several leaders hit hard today. I mean, if you owned, and we'll go through the names, if you own these six names coming in and that was all you owned, you would think that the indexes were down 2.5%. That's how hard they got hit. And it's just a matter of a very hard rotation day. There were some signs of weakness leading up to it, but culminating it with some big losses and some in a couple of stocks, and a couple more that we had to wrap profits up in or take small losses in. And we will discuss those as we go through the video. Short term, the S&P 500 and NASDAQ 100 are so extended from their 21 and 50-day moving averages that we put the yellow caution flashing light out. Doesn't actually flash, but if you blink your eyes real fast, maybe you can get that feeling. But some good and some bad news. The good news is that small caps made it back above the 50 and 21-day moving average here. We're keeping SML on here under neutral because we need multiple closes above that, and we really need to break the downtrend line that has been holding back small caps. Mid caps still below the 50-day and 21-day moving average, despite putting in a good day. All five of the major indexes still above their long-term 200-day moving average. And the market never gets into serious trouble unless the indexes start to break that level. We're very extended from that level on the S&P and the NASDAQ 100. So really what we're looking for is, and we've been saying this for a while, are these big 8 names going to start pulling back and some money flow into other sectors? This was all 11 sectors up today, so we had a little bit of that rotation, but what we didn't have was those big 8 names pulling back. They were strong today also, on average slightly less than the market was, so maybe a little bit of rotation there, but that's what we're on the lookout for. And these big names obviously hold up the NASDAQ 100, but the S&P 500 as well to a slighter extent. So let's get into it. What just happened? Index is strong, very strong today. All of them up over 8%. Pretty impressive. Don't often, as of late, see them all rowing in the same direction, but that is what we got today. But with that, you wouldn't have expected to see some of these leaders hit hard, but we did. Some up nicely, some up down badly. So there really was a bifurcation. Here are the numbers. The 21 over 21 list. I got this in the wrong color. This should be red because it was down by an average of 0.5%, despite 11 names being up, 10 names being down. We'll talk about the down names, quite a few breaking the 21-day moving average. So that's a bit of a red flag there, but there are others stepping right in to fill those holes that are taken down. So, and sector rotation is a sign of a healthy bull market. And that is what we're seeing. Doesn't make it any better if you've been in some of these leading names like Kava, CrowdStrike, TMDX as of late. But again, we'll look at the charts and we'll dissect it here in a minute. The big 8 up an average of 0.94%. The RG8 up 0.70%. But FFTY, this is really the key ETF as far as what our leaders doing, because it's the IBD 50. By definition, it's leaders only. That was negative today, and that kind of feeds off of or dovetails into what we saw with the 21-21 list. RG8, we said, still despite that, up on the day. So then the 5 indexes, S&P 500 up 1.02%, equal weight up 0.82. NASDAQ 100 up 1.04, equal weight up 0.8. Dow Jones Industrial Average up 1.1. Mid caps up 1.2, Russell 2000 up 1.1. So breadth was very clearly there today. We've been looking for that. We want to see more of it. There is a setup for mid caps, small caps, and RSP to really rocket higher. And the setup is a combination of the chart patterns for those, including the RG8. They're consolidating nicely. And the NASI McClellan Summation Index just finally hooking up off of over sold. You don't often see that coming off of oversold while the indexes are a stretch to the upside as they are. So uh, the quote unquote experts are looking for a pullback in tech and some rotation. But they've been calling for it for a while, and we just haven't seen it. And until we do see it, um, all we can do is talk about it. 60/40 stock and bond up 0.68%, mostly all stock driven. Our flagship GROTECTION portfolio up 0.51%, lagging the indexes, and that's because we were in some of those names that got hit today. We'll take a look at those charts in a minute. Let's start with the index charts, and you can see after undercutting and reclaiming the 8-day moving average 7 days ago, 7 sessions ago, 7 straight positive closes, and this is the biggest of those of the 7. Is it exhaustion? I don't know. It's kind of funny that it's happening with a big, supposedly important CPI print tomorrow. Was it leaked? I don't know that. Um, but very extended from the moving averages, 2.7% from the 21, 5.5% from the 50-day. Let's move on to the NASDAQ 100. This is even more stretched. Also up 7 straight days. Not the biggest gain, I don't believe. No, not the biggest gain of the 7 days. We'll leave that to the S&P. But extended 4.1% from the 20-day and 8.7% above the 50-day moving average. They're strong. No arguing about it. All we got was a little 2.5 week consolidation before heading back to all-time highs. People owning the indexes in the NASDAQ 100, pretty happy. Dow Jones Industrial Average, nice bar today, up 1.1%, holding the 21-day moving average, and that's a new 5-week high. S&P 400 mid cap ran right into the declining 21-day moving average. Overhead there, we've got the 50-day moving average. We've been drawing this line for a while. Actually, two lines have been drawn for a while. The relative weakness of mid caps and this declining tops trend line. A clear breakthrough here, including the 50-day moving average, would signal expanding breadth and some rotation into these mid and small cap and smaller large cap names, because the RSP has a somewhat similar setup as well. The RSP regaining the 21 and the 50-day average. We took a position in this yesterday and are looking to add to it, anticipating some possible underperformance by the S&P if money comes out and goes into more equal weighting. And again, this relative strength lagging on the equal weight index. This doesn't go on forever. At some point, it will, at a minimum, do what we saw here, and that's just stay in line with the S&P 500 while it climbs higher. And again, that's why we're big proponents of using leveraged ETFs to get into the S&P 500, and then when the market winds are at our back, augmenting that with leading stocks in leading sectors. So there's the RSP. Let me quickly show the QQEW, equal weighted NASDAQ 100, as that broke out. 2 days of a pullback, making a higher high, looking pretty good there, despite, again, relative weakness against the S&P 500 and certainly against the NASDAQ 100. Finally, let's bring up the Russell 2000. One above, one below, one above, one below. I'm talking about closes versus the 21 and 50-day moving average. So today, back above. You could draw this trend line several ways here. And if you draw it very steeply, and that's really ignoring the wick from this day, we broke out last week. Note we're making these higher lows. We've been pointing that out, but very clearly a break above, and make it obvious that we're breaking above this downtrend line is what we want to see, and also get some relative strength in there for small caps. Let's go to the dollar next. Dollar in a tight range over the last week after some big pullbacks the week before. The VIX continues to stay low. The ATR of the S&P 500 is down around 0.75%. That's historically on the low side. How about gold and silver stocks? Gold up after a 2-day pullback after two gap ups. Well, really 1-day pullback and then a consolidation day. Closed at the bottom of the range, but still positive by 0.37%. GDX, very strong day, up 2.6%. This is kind of it broke the downtrend line 5 sessions ago, had a second gap up, a 1-day pullback, a consolidation day, and now a breakaway gap again coming into the top of this cup that it's forming. And note the relative strength on gold stocks as well. SLV, we own this 4-day consolidation here. This is our how we're playing the precious metals right now is with SLV, but we've got GDX in our sights as well. On to bonds. Nope, not quite yet. Let's go to Bitcoin. IBIT down again, consolidating at the bottom of the range. Serious relative weakness versus the S&P 500. Now on to bonds. BND tight for 4 days. TLT, this is the long bond, tight for 4 days. We've got CPI tomorrow. Is this going to move it? TYX gap showing lower here. That's the long bond. Not sure why that's showing as low versus what the TLT did. That's a little bit of a surprise. TNX down 0.7%, 4-day tight range there. All right, so that's our inter-asset correlation. Let's get to the tail of the tape. CPI tomorrow morning, PPI Friday morning, 5 of the last 6 days, 7 days above the 8-day exponential moving average, 27 above the 21-day. Sectors, 11 out of 11 of the spider sectors positive, led by banks, semiconductors, XLB, that's basic materials, and XLK, technology. To the downside, IGV, the only sector of meaning that was down, and it was barely down, down hard early, but made a bit of a comeback. Portfolio stopped on two leaders, TMDX and Kava, trimmed some more crowd on weakness, bought GLW and CCJ. We'll talk about those momentarily. Bottom line on the day, strong index gains, but several leaders hit hard. CPI on deck tomorrow morning. All right, let's go to the 21 over 21 list here. And let's talk about the 2 stocks that we bought today. We'll just work our way through it, and then we'll talk about what we got stopped out on. So this is sorted from high to low, high gain to low gain on the day. And these 2 that we bought this week weren't in the 21 over 21 list, but this downtrend line, we're making a concerted effort to get in on day 1 of a changing character on names. Very often we would wait for some confirmation on these, but going back and looking at some things, the earlier you can get in, the better. Our stop is our best friend in this situation. If we're going to get stopped out, the earlier the entry, the better. When you see volume like this, take a swing at it. That's kind of what we're attempting to do here. There was some news on the government, some bill that's supposed to benefit nuclear reactors and uranium. We like buying things like this that are commodity based after a pullback, but a strong regain of the 8, 21, and 50-day moving average. You could also consider, and we also considered uranium, URNM, but we went with CCJ, the leader in the group. The second thing that we bought today, GLW, looks extended, doesn't it? Well, once again, this is that prefer to get in on the first day up. So what they did is GLW pre-announced, raised revenues and earnings. And this is a stock that I haven't heard discussed as a leader in, I can't tell you the last time I heard of it. The numbers aren't overly impressive, but they are LCD fiber optic, and that's needed to build out these data centers. And that was a component of that was one of the reasons why they raised their guide. So you see the gap up, second day higher high, third day higher high. We got in right about 45 and got an immediate gain, even though it's the third day. Why can you buy something like this extended? Because we're going to play it using the 8-day exponential moving average as a stop. So we're risking 0.15% on if we get stopped on a big move down to the 8-day exponential moving average today. So the risk reward is there, although it's extended. And really, we've been kicking ourselves not getting into Tesla. So if you want to go by really, where's the day one change in character on Tesla back here? It's here after a tight consolidation, but we didn't buy it because it was above the 21-day moving, or still below the 200-day moving average. Then the next day, it got above the 200-day moving average, and I didn't buy it. I said, well, it's up 4 of the last 5 days. How about a little handle right here back into the 200-day moving average, and then I'll buy it. And I didn't, and it gapped. And now if you're in it, you're obviously chasing. So we're looking for a 60-minute stochastic pullback on this. Very clearly from the volume here, Tesla has reasserted itself as a leader. Let me bring up that 60-minute stochastic right here to show what we're talking about. We want to see it come down like here. That means that momentum is slowing. Look at how this stayed pegged above here. We were looking at it here if it would have gotten back to oversold, but it did not. Now it's hooked back up again, but it's got a long way to go down. So momentum has to slow on the stochastic before it can even pull back. And very often that 60-minute stochastic corresponds with a pullback to the 8-day moving average. Strong stocks can ride their 8 EMA or 10 simple moving average up higher for weeks if they're going to be a true leader. So we'll look to sneak into it there, similar to the way we did with Corning today, GLW, and see where that goes. Now let's talk about the beatdowns from today. So now we're looking at the bottom of the list. TMDX, just riding the 21 nicely, calmly, 3 straight days of down. Your risk is always to the 50-day moving average whenever you buy a leading stock like this, but we just didn't have enough cushion to withstand the pullback. So we took small losses in this. Kava, there's a sell rule, multiple attempts at a new high that can't sustain. And we took some profits on this. Actually, we added to it, immediately stopped out on the new ad, and then got out of the rest of it today. Is very good winner, still about a 40% gain and about 3.6 times what the S&P did over the same period. So it was a successful trade. But back to the 50-day moving average. After this nice move, it may need another base. It's up almost a double, going from 60 to 100, not quite a double. But a pretty big gain there, may need a new base. So stopped on Kava, stopped on TMDX. We don't own Bros, but this was very harsh today after riding the 21-day higher, 2 days of selling. ELF breaking the 21, volume not really there, but down 3.4%, pretty harsh. CrowdStrike, this is another one, attempted to move out, attempted to move out, attempted to move out. When it failed on the move out yesterday, we took half off. We took another half of the remaining half, so down to a quarter position on it now, booking gains of like 12 to 15% over the last 2 days. More than we got out of the indexes, which is always, we're always looking to do 2 times whatever the index does with anything that we buy. First close below the 21, stop below today's low will get us out of the rest of the position. There's been some volume on the selling as well. And software was strong 2 weeks ago, has been pulling back over the last couple of days. There's cybersecurity. Here's IGV. You can see the pullback here, still just to the 21-day moving average after a breakout a week and a half ago. So Crowd, also partial stop out there. What else was weak today? Uber, trimmed some more of this yesterday. Broke below the 21 today, and this is another situation. Try to move out, try to move out, try to move out, and reversed. While the indexes are going higher, a lot of these leading names have just been going sideways. It's rare to find a stock like Tesla continuing to go higher. ARM is another one that comes to mind. NVIDIA had a brutal 3-day sell-off, but it's forming a cup again. But there's been a bit of a lack of progress and several attempts to move higher. And if you can't move higher, eventually you're going to go lower. Spot, another one breaking the 21 today, down 2%. Pinterest breaking the 21. App Lovin bounced at the 21. Datadog, three harsh days down, basically giving up the entire 2 week of gains. So, this was a day one change of character here. This would have been the day to get in. You'd have had decent gains, giving most of those gains back. Amazon continues to be capped at 200 as Bezos sells every time it ticks above 200. And then Tesla, of course, this is an ants indicator. It means it's up a certain percentage of days recently. Usually that means you get a little bit of a pullback and then you want to buy that pullback. That should coincide with that 60-minute stochastic and a touch of the 8-day moving average that I pointed out a little while ago. And SMCI, not making any progress on this, but I like the way that it has consolidated on lower volume. This is one that we did get on the first day of the change in character here, and able to survive the pullback when you get that lower risk entry. So we sold this at like 927, re-entered it around 900, consolidating nicely. It's a big winner, great fundamentals. We'll see if it can go higher. That's going to wrap it. As always, like to hear from you. The email is don@revereasset.com. I'm on Twitter at @dvandenbord. The phone is 855-REAL-WEALTH. That's 855-732-5932. If you're interested in becoming a client, you can also email my partner, Dan Stewart, dan@revereasset.com, and he's the one that answers the phone when you call. Our flagship portfolio is named GROTECTION. It's designed to grow assets during uptrends, pull back when things go sideways, or pull back a bit, and get the heck out of the way during downtrends, especially on a break of this black line, the 200-day moving average. That's where all bear markets occur. If you break below there, breaking below there doesn't guarantee a bear market, but no bear market has ever occurred without a break below the 200-day moving average. So it's a pretty common sense approach to get defensive, if you ask me. And that's going to wrap it. That'll wrap it for Wednesday, July 10th. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening and have a great day.